with the rise, I guess the shift in the venture markets, given the challenges with the mining industry. One of the sort of common industries we see prop up when we see venture companies is the tech side, and recently, quite common now it seems, is the medical marijuana production, and for those types of areas, the SR&ED incentive program becomes a very useful place to look. So what we'll cover is basically the basics to the SR&ED program, what expenditures you can claim and how the credits work, the planning opportunities in particular with private companies that have yet to go public. I know many of you probably work with some private companies as they're anticipating of going public, and making sure that identifying that before they do so that they maximize the credits that they have available, and I'll get to that a little later as to why. And then basically the recent developments that have occurred within the program. I'm sure many of you have seen it over the years, and there have just been changes over time that have occurred. So the basics. You've got 18 months from the company's year end to file and to claim it. The advantage of claiming so is not only do you get a credit, but you also segregate these costs into a separate pool away from things like your non-capital losses that have an expiry date. Fortunately, with the SR&ED pools, they have an indefinite carry forward period, which will allow you to use it when perhaps the company gets profitable. For years after 2013, CCPC, which is a Canadian controlled private corporation, they have the opportunity of getting a refund of 35% of their expenditures. This caps out at $3 million of expenditures. Once the company is no longer a CCPC, essentially that once they've gone public, this drops down to 15% and is no longer refundable. It does have a carry forward and carry back period of 3 years and 20 years forward. In addition, there are various provincial tax credit programs that combined with the federal one provide a pretty good incentive. In BC, it's a 10% credit. So to start with, as you're determining whether or not you would be eligible to claim, there's a few questions that you need to answer. The first being, what scientific or technological uncertainties did you attempt to overcome? So ultimately, what's your objective in doing the project and doing this program, and describing that. Second, you would indicate what work did you perform during the year to overcome these uncertainties, so describing exactly the testing that's been done under the program and what you're looking to achieve. And finally, what advancements were actually achieved during the year as a result of what work was performed. So generally, when you see the actual form, they ask you to detail this. Normally, you'd have an engineer describe a lot of these when they get quite technical, and you would provide that with your claim. So the types of expenditures that you can claim under the SR&ED program, often the main ones being the salaries and wages of the employees directly engaged. There is a limitation if the employee is also a specified shareholder. So if they own 10% or more of the company, those have a reduced amount that can be claimed. The cost of the materials that you've consumed or you've transformed in the testing, arm's length contractor services, overhead expenditures. You actually have a choice of a couple of methods in how you determine the overhead. And on the negative side, post 2013, it used to be you could claim capital expenditures that were incurred as part of the costs that went into it. You no longer can claim those after 2013. And any government assistance or non-government assistance you receive as part of the R&D work, this reduces the SR&ED pool. Now, as I mentioned, for the overhead costs, you've got a couple of options on how you would claim or report that. Usually the more common one is what we call the proxy method, where you take a percentage of the salaries and wages and basically use that as a perceived amount of admin or overhead costs that were directly related to the R&D project. Alternatively, you can do the traditional method, where you actually specifically identify what expenditures were connected to the project, and normally you would have to prorate this on a reasonable basis if you have it both relating to non-R&D as well as R&D type activities. So as I mentioned, there is the planning opportunities involving the credit for companies before they go public, assuming they're Canadian controlled. The significant one being that it is a refundable credit. So for every dollar you put in, you get back 35 cents in a refund, which then allows you to put more money into the R&D project and assist with the cash flow when you're limited perhaps in raising capital. Especially in the startup phases, where the capital injection is always the challenge, and once of course you go public, that then drops down to a non-refundable. But assuming that at some point along the way you see it becoming a taxable company or making profit, you can carry those forward to make use of them at a later date. So it does often pay to also consider claiming it once you've gone public, even if it's not refundable. And as I mentioned, plant sciences, botany are eligible. So as the growth in that medical marijuana industry continues to grow, things like techniques, equipment, that sort of thing, and developing it, it tends to be a more and more common thing that we see in the public markets of when investors are looked to for raising capital for these, and it can be a very good way of recouping some of that early R&D or adding, as I said, more capital to the project. So some of the recent developments, as I mentioned, the capital expenditures no longer are allowed under the program. It used to be that the overhead proxy amount that you could claim was actually 65% of salaries and wages. For 2013 and later, for 2013 itself, it was 60%, but for years after that, it drops down to 55%. So there's been a slight reduction. And from the CRA program side, they seem to be providing a bit more guidance and trying to assist people. They're a bit more taxpayer friendly when it comes to this program. I believe CRA is trying to make an attempt to give people guidance to make it easier to understand the rules, and they tend to be less aggressive on the audits and more helpful, so that if you're not so familiar with the rules, they'll sometimes provide you with help on that.